What's going on, everybody? Welcome back to TCP for episode 71. We got another awesome trader on the podcast for today's episode. Excited for you guys to join us once again. Diamond Trades, what's going on?
Alejandro, what's good? Like you said, we have another awesome trader on the pod. This is our first ICT trader on the pod, so I'm super excited. I think it's going to be a great time. Excited to get into it.
You took my starting line. I was going to say congratulations to Sniper, aka Matt Loeber, who is the first ICT guy to make it on Trading Camp Pod. First of many, I would assume. Matt, what's going on, brother? Welcome to the show.
Wow, that's a pleasure being the first ICT student on the pod. I didn't know that. But yeah, nice to meet you guys. I'm excited to be a guest with you guys tonight and just talk about the trading journey of how I started and where I'm at now.
Absolutely, bro. I'm glad that you are joining us on this episode. But as you mentioned, first ICT guy, first ICT student. This is interesting. So Diamond has been trading ICT smart money concepts, as he calls them, for like 6 months now. And I've been sort of sitting out watching from the sidelines, picking things up where I can. And the entire ICT movement I find to be very, very interesting. It has obviously taken FinTwit by storm. I think there are a lot of people who have found a lot of success using this trading strategy. And I'm excited to really dive into this and get a better understanding for what exactly you guys got going on. But Matt, I want to ask you to just start off by talking about your trading journey, how you got into the markets, how and why you began trading in the first place.
All right, yeah. So my journey started with trading when COVID hit and the market pretty much was coming down, crashing, and we were coming to a bottom. I was kind of just like chilling on like Instagram socials, and I was just seeing like people and like these entrepreneurs like just starting to do like these hustler moves. Like drop shipping was becoming a movement that was getting pretty hot, like e-com, and some of my friends were getting into that space. So I tried getting into that, and the drop shipping and the e-commerce little niche didn't really work out for me. So I started just like I brushed it off for a little bit. And then one thing led to another. I started seeing people make these ridiculous amounts of money, like these fast gains through options trading. And that's what kind of got me into like this lifestyle and this kind of niche for trading. And the fast money is kind of what got me to like really dive into this. I was like, holy shit, like all these other people are making like thousands upon thousands of dollars overnight by just like pressing a couple buttons. Why can't I do that? So I did what every other person would do, and I just watched a couple of YouTube videos and threw a couple $100 into a Webull or Thinkorswim account and thought that I could become the next Jordan Belfort. So that obviously didn't work out too well. And I was just continuously trying like just retail patterns and like the typical support and resistance stuff. Like it was working for a little bit here and there. Just watching like the typical retail ideology. Like I was making some money, became profitable for a little bit, but like I was very inconsistent. And that's the whole thing with trading. If you want to make this career, you want to treat trading like a business. And in order to make it long term and want to have longevity in this niche, you need consistency, because consistency leads to profitability. So I found out about ICT through a trader on Twitter. He's actually named Trader Day. I saw him calling out moves of like predicting price, where it's going to go for like Bitcoin. And I was like, how is he calling these moves? Like I was so interested and intrigued by this. So I looked more into it, and then I started digging deeper, and I found out that ICT was his mentor. And then I found out there was a free mentorship on YouTube, and I started the YouTube mentorship from ICT, the 2022, at I'd probably say it's been about a year, maybe a little less. But I started off with the 2022 mentorship with ICT from scratch, and pretty much just completely went full blown ICT concepts from this point on. And yeah, that's pretty much where I'm at now. And that's my drive, and my niche is what I'm diving into with the markets.
What was it that you saw in particular that made you like, yep, this is it for me? Like it's time to drop everything else that I'm doing and sort of just focus on this one style, this one strategy. Because I'm sure that whatever it is that you were doing before, you said you were making some money here and losing some money there, you were inconsistent. I'm sure it took a long time to even get to that point. What made you throw all of that out and say, I'm going to start from scratch and go this way?
Yeah, so the biggest takeaway that I had in regards to switching from like the retail concepts of trading and switching it to the ICT concepts was my consistency in regards to like my trades and how profitable I was for this month compared to the next month. So it was the whole thing was consistency in regards to how much money I was making. And I wasn't satisfied with where I was at in regards to like my experience, because COVID was in March of 2020, I believe. And from that point on until now, it's been roughly about 3 years. So I was trading retail for like well over a year and a half, 2 years. And I wasn't making the progress that I would want to make in that massive gap of time. And I was like getting impatient. I was getting frustrated, and I wasn't really seeing the results that I thought that I deserved. So I never stepped into like a mentorship. I never bought a course or anything like that. I always resorted to YouTube, and I never bought anything like retail concept course or anything like that. So I never experienced what a full blown mentorship was like, and I never had a mentor as well. So seeing Trader Day on Twitter and seeing him call these moves and seeing how this was like the fascinating thing to me, like what is a FVG on his chart? What is this buy side liquidity he's marking off? Like I had no idea what it was. So I was like, this is really cool. And there's a free mentorship on YouTube, and I've never had a mentor before. So why don't I just go full blown and just try and check this out and see if it works for me? And literally since day one of me trying it, I never looked back.
Right. Yeah. I mean, look, it's like, and this is why I was excited to get you on the pod. Cause I mean, Alejandro mentioned that I had a similar path where I, sort of just dropped everything and switched, and I've never really talked about it on the pod. And like, that is essentially like what happened. Like it was literally, it's like not easy, right? To have to learn something over like a course of time. And like you said, a year and a half, like of you spending time on this and not really getting the results that you wanted. For me, it was literally like 2.5, 3 years. And I was like, well, you get to a point where it's like, do you really want to give all that work up? And I think for me, it was something similar where I was like, let me check it out and at least see what people are talking about. And like from that first day, it just made sense to me. And so it was kind of like, it was easier than it would seem, I guess, to sort of say, all right, I'm just going to shift gears in this direction, right? Like it's going to be like a lot of work, obviously, to learn it and to get consistent, and to feel confident in it, right? Especially like risking live money behind it. But I don't know. I feel like for some people, if it's going to click for you, it will just click, and like it's not going to click for everybody if it doesn't, go do something else. That's completely fine too. So I like how I completely agree with that point where it's just like you get to that second episode and you're like, all right, yeah, like I'll probably just do this going forward.
At first, like I was so hooked, I was treating it like a Netflix series. Like I was literally trying to watch like 4 videos a day. Like, but it wasn't because like I was trying to speed through it. It was because I was becoming obsessed with it. And the reason why I loved it so much was because I was understanding why price was going from point A to point B. I was understanding why this candle is forming the way that it's forming. The thing is with ICT, you're building and understanding the narrative as to why price is doing what it's doing. That's the beauty of this. It's literally art. Like, I knew that once I found ICT, there was no going back. I have no plan B right now. Like, there's no, I don't have no backup. Like, I'm not doing no 9 to 5 career. Like, that's not an option for me. I'm not doing that. This is my passion. This is what I want to do for the rest of my life. And even before ICT and like doing guidance in regards to, like, I guess just making educational content, I was doing that in retail for like another Discord that I had for options trading. So before ICT, I was still doing and like teaching retail concepts because like I loved charts and I loved trading, but I'm doing it again now. But in regards to the ICT's concepts, because now I understand what he says with building a narrative, finding your daily bias, your weekly bias. Why does this candle look like it's expanding this way? Why is the reversal here, etc.? Just stuff like that. I just find the whole smart money concepts, ICT concepts, very, very fascinating.
So for somebody that has no idea what we're talking about, that has never heard of ICT, has never heard of smart money concepts, if you don't mind just kind of starting with the basics or giving general background to what exactly makes these smart money concepts or this trading strategy so different from others.
So you're going to, you could just pretty much start off with just the concept of support and resistance, which is basically something that everybody knows as a beginner trader and what we learned from getting introduced to retail ideology. So support, let's just start off there. What is support? Where price looks like it is holding as a bottom floor. And you'll typically see price come down and it'll act like a double bottom. Like, you'll see it come down, it'll bounce, come down again, it'll bounce again. And what does that do? It looks like there's a floor where basically, like, from a retail's perspective, okay, they're buying at this price. It looks like there's like fair value at this price. So if price comes down again, I'm going to buy at this level because it's going to bounce again. So you're watching the support level for a buy point. But from a retail's perspective, they're going to buy at the support. And what happens if it breaks the support? They're going to close it because, okay, the floor broke out. It's going to drop even more. But from a retail's perspective, or from a smart money's concepts perspective, or ICT concepts, what we're looking for is those equal lows or that double bottom to get broken, because what is below those equal lows? Liquidity for people that have their stop losses right there. Because if they break the support, their stop losses are hit and they're out of the trade. So from our perspective, we're looking for those stop losses to get hit, for price to then break down below and reverse in the opposite direction. So we're looking for those equal lows or that double bottom support to get broken, and then you want to see price reverse the other way to the relative equal highs or the resistance point that is above, if that makes any sense.
Let's see if it does. So I'll try to explain. So, all right, you have, let's say, stock whatever, Google is trading at $100. Okay, you have $100 support. There's a double bottom at 100. You're looking not to buy at $100 support when it comes down, but you're looking for a break below $100. Then you want to see price come back above 100, and you would expect it to go higher. Is that what we're talking about here?
Yeah, the reaction that you kind of want to see like an energetic reaction after that $100 support is broken. Mm-hmm. You want to see price break down below and then very fastly or energetically move back up above the support So it looks like kind of like a wick that just broke down below and then ripped right back up, because all that wick did was clear the liquidity and run the stops of everyone that was long at $100.
Right. Yeah, that's actually really interesting. Noah, that was the trade that I took today on ES, the 4100 break. So I waited not to buy at 4100, but I was waiting for a tap of 4095 and then a reclaim of 4100. And that's when I got long at like 4103. And we got like 10 points off of that. But it's you describing it that way is very interesting, because now looking back, there was certainly an energetic move on the reclaim. And when you think about it like this, and this is why I really started to focus on trading these failed breakdowns versus just buying at support. A lot of times I feel like if I'm buying at support, I'm just guessing. I think that a false breakdown and then a reclaim of a level of support is a higher percentage. There's a higher chance of me being correct for that reason. They're running the stops and you can just grab it on the way back up. But yeah, a lot of times, and you kind of learn, especially when you've been on the other side of the trade, right, where you get that 4100 break and you chase the short because it looks like it's going to dump. A lot of those moves, when it comes back above the level, as you're describing, are energetic. It's like boom, like they squeeze the fuck out of everybody that took that trade. And I've been in that trade on the other side where I'm like, as soon as you grab the short and as soon as it gets back above your level, you're like, oh shit. And they just rip it. So that's like one of my favorite trades I like to look for. But the way you explained it makes a lot of sense. I think people should really focus on that in their trading.
Yeah, it's actually from the ICT's concepts, that is, you call that a power of three. It's pretty much like a accumulation, and then a manipulation move, and then the distribution, which is the real move. Like the breakdown below the relative equal lows or the double bottom, that is the manipulation move, the fake move. And then the real move is the distribution up, like you just talked about, right back above the support that is now no longer support, and we're off to the races. Rip it up.
I think one of the reasons, like in particular, over the since ICT has sort of grown, and you said that you sort of got involved like around this time last year, maybe a little bit less. So like last April, I really started to actually pay attention to the video. Saw him initially like late October, December, decided to take it seriously, and it's just been kind of that since I've started to, I guess, follow him more and watching like what he does on Twitter with his spaces and his tweets and all this stuff, and all the other people in the community. I mean, we were just talking before we hopped in the pod, the ICT like part of FinTwit is almost like a subsection of FinTwit, because Honda, before you got on, he literally asked me like, who have you guys had on the pod? And I'm like, I've had 70 people on the podcast. Like, how have you not like heard of any of these people? But I mean, it really is like its own like little section from what I've started to realize. And like the one thing that I found is that it can be like extremely controversial, right? Like people have a strong opinion on it, whether they like it. If they like it, they really like it. They swear by it. ICT concepts are the golden and XYZ. They always work. And then you have people who are like, this guy's a scammer, which I mean, I never really understood. He doesn't sell anything. Like, but this guy's a scammer and whatever, his stuff doesn't work. And these people are a cult. Why do you think, I guess ICT himself and the following that he's built and the methods that he's teached has become so polarized, I guess, particularly like in the past like several months? It seems
so
like.
Pretty much like, why is ICT's like audience like a cult?
Yeah, more or less.
So okay, so here's one part that I want to make clear. I am not some person that's like, okay, you trade retail, you're an idiot. Like, no, if you trade and you make money, that's phenomenal. If you trade support and resistance and double bottoms and double tops, phenomenal. And it makes money, it fills your pockets, great. I'm trying to do what makes sense to me and what fills my pockets and what pays my bills. So that's all that should matter in the trading space. Like whatever pays you is that should be the golden rule. Like if you have a concept and you have a model that you have proven through back testing that is profitable, that is literally all that should matter. And you shouldn't care about the noise and all that other stuff. But the noise and the cult buildup and all that sort of stuff, it does stem and root from literally ICT being bipolar like he is, and you know that. His Twitter spaces can be very erratic. He screams a lot and gets very angry at a lot of people and will make it very known that from his perspective that he's the best and no one's better than him. So he is a very egotistical person, and that definitely rubs off on a lot of the people in this community. So his ego is very big, and his big ego has brushed off on pretty much every single person in the ICT community, and we're like the minions. And he's like Gru, and we're the minions from like fucking like Despicable Me type shit. That's how I see it. But I don't like being a part of that noise. I just appreciate the concepts that he's taught me, and I'm just happy that it has allowed me to find consistency and profitability. So that's all I need to really say.
And I love how you put it. Like it really does kind of root from him. And one of the things that I remember like early on from watching the initial videos was like exactly how much he shit talks like other strategies. Like this doesn't work. Like Bollinger Bands, bullshit. Like all that stuff. And it's like, as a student who's just trying to learn smart money concepts, like that's not necessarily like a core part of the lesson. The lesson is not about how RSI is bullshit. Like it's like he'll teach his whole lesson and then offhand, you think Bollinger Bands do that? Like stuff like that, you know, like over and over and over. And like as a student who's just watching this, it sort of like indoctrinates you. And I think that's where a lot of his students then come out and feel emboldened to go on somebody else's page and be like, you use Bollinger Bands? Oh, you must not know how to trade. Like, no, if this guy uses Bollinger Bands and it works for him, like he's a step ahead of you. Like, to be honest, like he's got his own model that works. Like you're still searching for yours. So I think you're right. I think that there's a lot of that within like the ICT community. And I think that's like one of the downsides, to be completely honest, from what I've seen. Like you get thrown into the community and you go on Twitter and you're trying to learn from other people. And then you have people who think that they are ICT himself and know everything and just shit talk everybody. And then you have other people who you've never even seen talking shit about your strategy. Oh, dude, these people are in a cult, and how are you learning from people on YouTube and all this stuff? And like, if you're a newer student, like that's going to confuse the hell out of you. And so I think, Twitter to a certain level can be a detriment if you're like brand new and you're trying to learn. And even if you're not brand new, even if you're somebody who's got their own model, like, like you've got a model and somebody on Twitter is going to talk shit about your model, and now that's going to get in your head. Like, doesn't make sense. So yeah, it's definitely something I would watch out for if you're, sort of branching out into smart money concepts for sure.
Yeah, the people that are even talking shit, they're not even profitable themselves. They're the ones that are like they can't pass funded challenges. They haven't seen a dollar withdrawal once in their life. They're the ones that are the keyboard warriors that just like are mimicking ICT himself, that just are just pissed off at the world. I don't even know. Like they lose a trade and then revenge trade, then blow the account. Like I don't know. I just think that it's best to just dial in. If you're going to learn these concepts, dial in tunnel vision on the YouTube 2022 mentorship. Make that your foundation. Don't look at any social media while you're trading live during the market hours. Literally don't look at shit. Don't look at Twitter. Don't look at Instagram. Don't look at anything. Just tape read, watch price, while also taking notes at the same time and journaling. Every day's price action is what I did. And finish that 2022 mentorship and then move on. And like, if you do want to expand your horizon, go into the core content that's like from 2016, like the month 1 through 12. after you finish the 2022. But like the entire time that you're learning these concepts, if you do want to, tunnel vision. Don't focus on anyone else besides yourself, because if you see someone that is killing the game and their learning curve was a lot shorter than yours, that's not going to replicate to you. Everyone's journey is different and everyone's learning curve is different. Like someone could learn and pick this up in 2 months and someone can learn and pick this up in 2 years. It will always be different from everyone's perspective, and you have to understand that.
Earlier today, I was thinking to myself, like, what would my trading look like if I wasn't alerting all my trades in a Discord? And like, you're talking about having tunnel vision, being very focused. Obviously blessed, to have the Discord and the community that we have, and it's phenomenal what we've built. And I do think it has been a net positive in the sense that I've learned a lot about trading, being surrounded by other people who are also hungry to learn, who are also good at trading. Primarily our team. I mean, we put our heads together and that's when shit really clicks. But I also ask myself, what would my trading look like if I didn't have to worry about alerting a trade? If I was never on Twitter, it's interesting, I think, subconsciously, whether or not I want it to affect my trading. I think that being a presence on FinTwit, it comes with baggage, in the sense that you're always going to have people attacking you, regardless of if you're trading well, if you're trading bad. There's always people talking shit when you're in the Discord. Not really shit talking in there, but you're seeing so many people take so many different trades, and there's all these different trading styles. And as a trader, it's very important, in my opinion, to be able to stick to your guns and have the stones to do what you need to do when the time comes to execute. And for lack of a better term, you can't give a single fuck about what anybody else is doing. Because for me, when I start thinking about, but does this align with, Noah's strategy? Does this align with Mo? Does Mo also have a level here? I'm just listening to guys in our Discord. What is Mander thinking here? How the fuck am I ever going to be able to execute a trade when I'm so worried about what other people are going to think about my trade? And that's something that I'm really trying to focus on for the year 2023, is creating my plan, executing the way I know how to execute, and not worrying about what other people have going on. And it's a very toxic culture on FinTwit, on Twitter, in Discords, because a lot of it is showboating. A lot of it is, when I'm taking a trade, and I hate that this is the mentality. I feel like it's been programmed into me. But when I take a trade, I know I have 100 people watching, and then I also know I have 20,000 followers on Twitter that I'm going to be reporting to. Like,
Yep.
Like, come on. Like, again, I wouldn't trade it for the world. Don't get me wrong. I love what I do. I love what we've built. But come on. I mean, does that make things harder?
No, it does. And I completely agree with you because, well, just to start off, having a Discord and alerting your trades and then also sharing it on Twitter, it holds yourself accountable. So it makes you more disciplined as a trader. So I do the same thing too with my own personal Discord. I post the draw and liquidity, where price is going to go. I post my trades, all that sort of stuff like that in my Discord. So I'm held accountable for what I think price is going to do. And if I'm wrong, then okay, I'm wrong. But that's the name of the game. And if someone wants to come at me and they want to ream me for being wrong or whatever, okay, fuck you. I don't need to listen to you. I know what I'm doing. I have a proven strategy or whatever. But another thing you said in regards to like tuning out like other people's strategies and other people's biases and stuff like that. That's the tunnel vision thing, I think, is a very important thing. But like, always trust your own analysis. Always trust what you believe. Be confident in yourself, and don't let someone else's analysis deter you away from what your original bias was, because that will be a big flaw in your trading. If you are very confident in what you just analyzed the night before. You're ready to press the buttons and execute. But then, oh, Noah said that he thinks the price is going to go the other way. And that just kind of messed with your head and kind of gave you like cold feet. Always trust what you think is what price is going to do, because it's going to benefit you in your journal after the trade. If it misses, what happened wrong, like it'll just be better on your psychology. Always trust your own analysis.
Completely agree. I mean, so many people in our Discord who follow ICT and are, studying smart money concepts and want to trade that way, want to learn that way. When he started his 2023 mentorship, started calling things live on Twitter, doing his live stream where he's talking about where he thinks price is going to go, like live on YouTube, stuff like that. Like, so many people got cooked during that. Just like trying to like having their own plan, and like he's pointing out an FEG and he's like, they're like, this matches up with what I'm doing. Like, I wasn't going to take it before. ICT just called it. I'm in there. Bad. Like, I feel like that is the type of thing, whether it's somebody in a Discord, whether it's ICT himself, whether it's, I don't care, whether it's Jim Cramer, right? Like, you shouldn't let those things impact the decisions that you make with your money, because it's not their money at the end of the day, right? Like, Jim Cramer says that he thinks that Meta is going to go to 100. Like, when he's crying live on TV, like, yeah, I'm sure that he was disappointed in himself, but like, he didn't lose the money you lost, right? So like, those are the things that you got to keep in mind. Like, at the end of the day, it's your money. You're the one pressing the button. Like, if you're relying on somebody else's analysis, like you said, to really make or break whether or not you press the button, they're controlling your money, not you, right? You should always have control over your stack, because ultimately at the end of the day, you have to report to you, right? Alejandro said, I've got people in the Discord and I've got people on Twitter. And while that's true, at the end of the day, Alejandro's it's him and his P&L, right? Like in that room, him and his computer screen, like, yeah, you have the option to report to people on Twitter, the option to put your trades in the Discord or not. But at the end of the day, it's you and the screen, right? It's you and that P&L. And so, I mean, you got to be responsible for the decisions that you make intraday, right? If I follow somebody and I lose, they didn't press the button like I did. So, I mean, that I think is what Matt's talking about, where it's going to benefit you. It's that level of responsibility is where I think the benefit comes in is, I'm responsible for this trade. If I win, I was responsible for that idea. I came up with that analysis, right? Let me dig into that. Why did this work? Why did this work this time and not that time, right? Like, dig into it. And I think that having that responsibility is what ultimately spurs that curiosity that makes you a better trader, right? Makes you go back test these different things that you're seeing intraday, makes you refine your strategy, to get better risk reward or whatever it is, right? Like, that responsibility, I think, is ultimately what changes you as a trader. And so I think that's a massively underrated and important step.
I couldn't agree more.
Yeah, I think it's tough in general to draw the line between, there are so many people out there who, when I go on FinTwit, my mindset is, especially through the podcast, I've met so many people who are smarter than me, who have more experience than I do, guys who have been trading for 10, 15, 20 years. I am open to learning from those types of guys. That's what we do this for, right? But I think sometimes it's difficult to draw that line between, should I be listening to what other people are doing under the assumption that they know more than I do, or should I be blocking out the noise? And I think that's the real difficulty, because for me, I'm 24 years old. I'm a relatively new trader. Until you have a decade of experience, you're not a veteran trader. Let's be honest. Like, that's kind of like the line in the sand. Like, if you can stick around in this game for a decade, okay, that's when you're in a different ballpark. So I'm still relatively new to the markets, so I'm still very eager to learn from other people. But how do I know where to draw the line between, I really got to focus on what I'm doing, and hold on, let me listen to that guy? And I think the answer to it is, once the market opens, and Matt, I love how you put it earlier, don't go on Twitter, don't go on Instagram, tune everything out while the market is open. While the market is open and it's time for me to trade and I'm in the arena, It's me, and as Noah mentioned, my P&L. And it's time for me to execute. That's not the fucking time for me to start, experimenting with, what user 846, found a Head and Shoulders on BA in the middle of the day. Like, what the fuck? Like, use the time when the market is closed to game plan, to learn, to review your mistakes. But when the market's open, god damn it, you got to execute. Because if you can't, when are you ever gonna get to that point, right? That's when it's just you and your trading. Outside of that is when, okay, damn, I had a bad day. Let me go review.
There you go.
Let me go listen to a podcast. Let me go do this. I had a good day. Awesome. Why did I have a good day? Let me review. But yeah, I think like market hours, it's got to be you. I don't care if it's your first day trading. I don't care if you've been trading for 5 years. When the market is open and it's time to execute, you need to be very focused on making your own decisions, in my opinion.
Absolutely. It is literally like, it is a tunnel vision mindset. You can't really focus on what everybody else is doing on Twitter or any other socials. You want to just, like you said, it's you and your P&L, and it's just time to dial in. And when you're done trading and you're done journaling your trade or your loss or your win or whatever, then sure, and you're calling it a day, there you go. You can go on social media and see what else everybody else is doing.
Then you can go on social media and feel like shit about yourself for not making 20K in a day.
There you go. Yeah. And then basically journal your aggression feelings.
I mean, look, and I don't want to belittle that part of it either, because I agree, right? Like when you have a bad day or whether you had a good day, right? Like there's days where I'll have a good day and I go on Twitter. I'm primarily like a long trader. I like to trade to the long side. The setups just present themselves more clearly to me for whatever reason. I don't know why.
No, trust me too.
I'll go on Twitter at the end of the day. I can have a good day where like I scalped a counter trend move for like 10 points. Like that's a solid trade. Like I'm in and out, done. I'll go on Twitter and I'll see somebody else saw it from the short side and took the opposite side of the trade and they actually won, right? And it's like it helps you see things. Other people are going to see things that you're not going to see, right? And so I think particularly while you're in your development, that kind of stuff can be helpful. But Alejandro hit the nail on the head. Definitely like while the market's closed, not like, intra-market, I'm about to take a trade. Oh shit, sniper is looking for a short here. Maybe I shouldn't enter, right? Like that's not the way to do it. I wanted to get a little bit more technical. We covered some of the early sort of, I guess, more beginner stuff. I want to dive into exactly what it is that you're doing with Smart Money Concepts, what exactly it is you're trading. What does your model look like? What do you look for to get into a trade, whether to the long side or the short side?
Okay. So my exact model is the breaker fair value gap that unicorn setup that ICT talks about. So pretty much what I do and what I look for is like what we were talking about before. We're going to bring this into the retail concepts. When price breaks a double bottom or you break that support, and then you get that energetic move into the other direction, the opposing side, you're going to look for the price swing that took the relative equal lows, and then after it took those relative equal lows, you want to watch price break up and close above the last up close candle that took the lows of the double bottom. And that is your breaker candle. And then once price retraces after going back up above the support and comes into the zone of that breaker candle, you're looking for an imbalance inside of that. And the breaker and the imbalance inside of the breaker area, that will be my entry. But I will also be stacking that with, do you use SMT when you trade?
Yeah.
Okay, yeah. SMT with the lows. So the breaker, fair value gap with SMT at the lows. And then I will do
What's SMT?
Smart money. It's a smart money tool. So pretty much a brief explanation. Let's say I'm looking at the S&P 500 and I'm looking at the NASDAQ. Let's say the S&P 500 broke the relative equal lows and broke that support, but NASDAQ did not. So what does that tell me? That tells me that NASDAQ is the strength leader and did not want to and refused to go lower. And ES did because ES was weaker. But the NASDAQ was saying, no, we're not going down there. We're strong and prices, we want price up. So when we have the confirmation that we just saw the run on liquidity, the relative equal lows, we have the breaker that formed, and we have the imbalance, the fair value gap that's inside of the breaker with the smart money technique or the tool with NASDAQ, I'll be confident enough to take the trade to go long to the opposing liquidity or the resistance that's above the relative equal highs that we're targeting next. And more in depth to that, I'll frame the trade and I'll do pyramiding with framing it like a market maker buy model. But that's pretty much how I frame all of my trades based off of the market maker models.
Let me, I guess, sort of run back through that for our listeners. So you have price at a low, we'll call that point A. Price goes up to point B. Price comes down and breaks point A, so it comes lower than point A. And then it reverses and goes higher than point B. So now you have a structure of low, high, lower, low, and a higher high. When price breaks point B, what Matt's looking for is a break with aggression. He confirms that aggression with a fair value gap. Essentially, you have a candle, one single candle, strong, green, where the candle to the left and the candle to the right don't overlap. That space in the middle is going to be your imbalance. That last up close candle that Matt was talking about is your breaker. You want those two to overlap. When it comes back down into that overlap section of your imbalance and your breaker, that's where Matt is looking to get long, confirming it with S&T at the lows, essentially just one of the indices correlated assets made a lower low. One of them didn't, showing a potential reversal at the lows, which is dubbed SMT, smart money technique, smart money tool, whatever you want to call it. That's essentially the entry model that Matt is looking for in his long trades.
I can draw it out. Can I share my screen with TradingView really quick?
Yeah.
Yeah, like literally, let's just say this is our lows, and let's just say this is our highs up here. And I'll draw it like this. Price is coming down like this, and this is our support right here. I'm going to watch price come down, break this support level, and then after price breaks the support level, this is our price swing that breaks it. This high and this low. The breaker gets formed when price energetically moves back up and takes this high. So this area here, this last up close candle is our breaker. But inside of the breaker, you want to see an imbalance, a fair value gap right here. So you want to see price come down back into the imbalance and the breaker and then continue in the opposing direction to the double top resistance buy side liquidity. And what you want to do is take your standard deviations, your Fibonacci's, and you measure the price swing from the low to the high of the manipulation leg, the price that ran the lows or took liquidity. And what I always do is I put my stop loss. Here's my entry here. I put my stop loss at the low, the lowest wick here. This is the stop hunt. And then my target will be 2 standard deviations, which is basically this price leg doubled. And that will be a 2-to-1 R trade. And that's what I usually take all the time.
All right. Question number 1. Which time frame are you looking for this type of setup on?
I do not trade below the 5-minute. So if I'm going to give you, this is how I pretty much do my top-down analysis. I start off with my weekly chart. I tell myself and I wonder, where is the weekly chart? Like, how is the weekly candle likely to form based off of where we are in price? And then once I get my weekly bias down, I go down to my daily and I just check like, okay, how is order flow? Is order flow bullish or bearish? And is there any obvious like areas of support or resistance or buy side or sell side liquidity that we can target on the daily chart? And if I find something on the daily, then I'll drop down to a 1 hour. And then after that, I drop down to the 1 hour. I'm looking for internal levels of highs and lows to take intraday scalps to target those internal highs and lows liquidity areas. And then I drop down again to the 15 or the 5 minute, and that's where I seek my entries.
Okay, so as far as support and resistance zones, are you charting zones or are you charting like one like target area, like one line or one point?
I have an example right here on NASDAQ today, and I think that this was literally a picture perfect example. This is the exact same setup that I was just labeling off. We have a low here, and I'm on the 5 minute chart, by the way, for NASDAQ. We have a low here, and at the New York Open at 9:30, equities open, you kind of treat that open. It's typically very volatile, and I don't trade the opening price because I treat it as a Judas swing, which is called a fake move. So this is our Judas swing lower, taking out these lows here. And then once price takes out the lows, what does it do? It energetically rips back up. As you can see, literally, it literally just looks like a wick. So if I'm on the 5 minute, price energetically moves back up and comes back down into our POI, this breaker, and then tags an imbalance that's inside of the breaker. And what do I do after that? I do my projections. I measure the manipulation leg that took liquidity and then ran the high again. So from this high to this low, and then to 2 standard deviations, I go long right here with a stop loss below the low, and I target up here. And you could, if you take partials, this high, any highs are rested above, can be looked at as a partial point, or you will adjust your stop loss accordingly to reduce your risk. But yeah, this is pretty much the exact thing that I look for.
My question is, support and resistance is obviously it'll like develop and it forms intraday. It's everywhere on a 5 minute chart. So are you coming into the day with a plan like targeting major levels of support and resistance? A support level like today, 4,100 on ES, that was clear support yesterday. Would you come in targeting a level like that for like a false breakdown like that?
Yeah.
Where you get your breaker setup? Okay, then are you ever like taking trades on the fly? Like if let's say like 4110 is, developing, you could see price reacting there intraday and it's clear support. Would you ever take something like that, or are you really just basing it off of?
You said 4,100 was support, right?
Yeah.
This is your 4,100 right here. Your 40 right at 4,099. This is previous daily low. And what you see here is price treating that 4,100 as support. What I see it as is price breaking the low, clearing the sell stop, clearing the stop losses below the 4,100 level, and then energetically moving up. So this would be like that false break down below. And if you wanted to take the trade on this to that 4,100 level, it would be the imbalances after. It's just a market structure shift after you break a low, and then you see an imbalance created here. And this is all after you run highs targeting that 4,100. If you did want to take it short down to that level.
Mm-hmm.
So I think what Alejandro was asking, and I think what Matt was trying to get at, is in terms of like, do you see these setups form just on the fly and take them? And I think that's a really good question, because I think that's what happens to a lot of newer traders who get involved in smart money concepts, and they watch, a YouTube video on breakers, or they watch a YouTube video on, some sort of entry model. So what Matt described with the breaker, that high low, that low high, lower low, higher high, that's an entry model. What will happen is people will see that form on the fly, like Alejandro's talking about. Here's a breaker, because it technically did all of that. It technically did the lower low, low high, lower low, higher high. It technically did all of that. It technically has a fair value gap inside of it. Shouldn't I take this trade to the long side, even though it didn't necessarily have all the components? It is technically a breaker. It is an entry. Shouldn't I take this for a long? And that's where I think people get in trouble. So to answer your question, Alejandro, I think the key part is what Matt is describing, is having that context around why it's happening there. Why is the breaker forming at 10:30? Why is that happening right after New York Open? Where did it happen? Why did it happen right below yesterday's low? Right? Why did it just barely break yesterday's low? It didn't come down to it and stay above it. It broke it and then it came back. Why did it do that? Right? I think having that context behind the trade is what you're searching for when you get into smart money concepts. Because I mean, look, I've only been doing this for 6 months myself, right? And this is something that I've started to learn through as I've gone through it. Is it's not every single low, high, lower, low, higher, high, fair value gap, I'm taking that for a long. You have to have that context. Where is it happening? Why is it happening? When is it happening? Right? I think that those are the things that can prevent you from, because not every time that you see that lower low, lower high structure with a fair value gap in it, it's going to bounce immediately and give you a great trade like it did today. Right? Today's a perfect example of that. And I think when you have all of those pieces of context, that can prevent you from taking those on the fly trades that you're talking about.
Yeah. So basically, it's just like forming a narrative as to if price does this, then this will happen. Like when I said I was doing like top down analysis and like I guess like taking trades on the fly, it's basically I'm taking these trades on the lower time frames based off of what the higher time frame is telling me, if that makes any sense. So like if I'm looking at like the higher time frame, like the daily chart, I see that the daily chart is bullish. And if I'm looking inside of the daily chart and I'm seeing that price is trading inside of this little imbalance here, and then I drop down to like an hourly chart and I know that the higher time frame is bullish, I'm going to look at what happens when price breaks below a previous daily low or a previous daily high, if there is a reaction after price breaks those points. Because after price runs those support or resistance levels or the liquidity areas, I'm basing my trade off of what happens after that. And my model forms after we run liquidity areas, like I showed on that 4,100 level. Because we ran liquidity, and what happened after we ran liquidity? Price had an energetic move to the upside. So pretty much form my model based off of that. And it stems from a higher time frame narrative, because you don't want to bet against or trade against the higher time frame order flow. The trend will be your friend, pretty much.
All right, last thing I want to ask you here. What were some of the struggles you had when you first started learning this stuff? What are some tips that you would give people who are just now diving into smart money concepts?
Struggles that I had when I first got into this, like we were talking about before, kind of discouraging yourself based off of seeing other people's success. I was pretty much like letting myself down and feeling pretty like upset the fact that like I was seeing all these other people on Twitter like posting all these wins, and I was basically like trying to trade in the opposing in the opposing direction of the winning side. And I was journaling consistently and doing all that, but like I wasn't seeing the results that I thought that I would see. And like I guess I really wasn't submitting to the time that I really needed to deal with, because ICT in the mentorship, he says that you should be trading paper for 6 months until you find profitability on paper trading. And obviously, like I didn't do that because I was impatient. I went right into trying these funded accounts, and what happened was I was failing challenge after challenge after challenge until I literally said, you know what? I don't know why I keep wasting money. I'm actually gonna listen to him. So I tried my best to just keep reviewing all the YouTube videos and find out through back testing what model made most sense to me. And I kept doing that through the knowledge and the resources that was given to me through ICT. And I came up with that breaker fair value gap that made the most sense to me. And it showed me consistency and profitability. So you want to pretty much build the confidence and the most confidence you can in your own personal trading model, because you want to trust your own analysis and you want to trust your own entry model, because you won't make money if you're not confident, and you won't make money if you don't have a trade model that you've proven is consistent and profitable long term.
I love it. That just goes to say that people got to stick with it, man. People got to stick with it, regardless of if you're doing ICT stuff, regardless of what you got going on. Trust the process. It's pretty much it.
Trust the process and don't rush it.
Exactly. Well, Matt, it was a pleasure having you on the podcast, bro. I appreciate you coming on. This was good. A good introduction to ICT stuff. Maybe one day we'll get the man himself on the podcast. That'd be something else.
That would be a blessing in itself. But yeah, thank you guys for having me. It was great meeting you guys, Noah and Alejandro. I wish you guys the best in your trading. And yeah, it was great meeting you guys.
Thank you, brother. You're the man.
Mm-hmm.
All right, Noah, another phenomenal episode. I'll catch you next week for episode 72.
Yep. Thanks again to Matt. See you guys next time.